What are the best stocks to buy now? Welcome to Hawaii, the beautiful island of Hawaii. I'm in Princeville on vacation with my family, but I wanted to bring you up to speed with the market and 5 stocks that I've been buying. So last week, Monday, of course, we had a brutal sell-off. The markets recovered very nicely over the last several days. Everything green here in the major indexes. The Russell 2K was down about 0.5%. That VIX is all the way back down to a 16. And you can see the heat map here. Google is putting some pressure on the QQQ and those mega cap tech stocks. Overall, a lot of green. You see some red here in semiconductors, Qualcomm, Texas Instruments, ADI, and a few others. Of course, we had CPI data, inflation data today. Consumer price index rose 2.9% in July from a year earlier, according to the U.S. Bureau of Labor Statistics. That was the lowest reading since March of 2021. Inflation for consumer staples has eased considerably, economists said. Here's a quick breakdown. You can see food 2.2%, food at home only 1.1%. Got to stay away from those juices and drinks. Looks like eggs 19.1%. Frankfurters, bacon, you can see on your screen. Energy up 4.9% and insurance 18.6%. Now looking at the data, you can see in 2021 January 1.4%. It spiked here. It topped out 2022 June at 9%, and now we're back down to 2.9%. So the next Fed meeting, the FOMC meeting, is going to take place on September 17th and 18th, 2024. In June, the Fed signaled that rates could begin to decline in the future, but they will keep an eye on stubbornly high inflation. So the PPI index was slightly lower than expectations yesterday, and CPI slightly lower than expectations today. That, of course, is a good sign for September that the Fed will likely cut interest rates. And right now, there's a debate whether it's going to be a quarter or maybe 0.5%. So as of right now, that soft landing thesis is still intact. Now, in our last official chart day, we said it was the first bearish reading we'd seen for several months. And we said there's a possibility the QQQ, this is a NASDAQ 100, that you could see something between 416 and 428. Now, we bounced here just around 425. It was 424 and change, and it was below the 200-day moving average, not quite to this orange trend line. And you can see it's bounced up nicely. It's now back above the 100-day moving average. Still needs to capture that 50-day moving average. This next Fibonacci pivot point here is around 476, then you have 495, and you can see it goes all the way up here. This is $525 on the R3. That is the possibility to the upside if the market remains bullish. Now, this first stock was one that we said was part of that phase 1 for generative AI. It would benefit along with Nvidia and Microsoft and Broadcom and several others. It's SMCI. So we didn't want to chase this huge pop here. This went from $275 to $1,229. This was in March of 2024, and you can see it's cratered down below all the moving averages, almost got to the S3, just above this S3 right here. So this is $466.76. So if you look at the past month, Super Microcomputer is down about 35%. Over the past 6 months, about the same, about 35%. Year to date, the stock is still up over 100%. So the 52-week low is 226.59. That 52-week high got all the way up to 12.29. 12 months trailing PE ratio is about a 28.76. That market cap, 33.79 billion. So I told the gang in Discord that gap fill around 490 is a good possibility, and that's where I was going to buy. I bought at $489. Also said that if the downside continues, 300s is possible. And you did get buyers here, and it bounced essentially from the S3 up to this S2 right now, but still below all the moving averages. And you can see in Discord, I posted here on August 8th, the reasons that I added SMCI. First, that PEG ratio was approaching 1, which offered about a 50% discount to peers with quite a bit more growth. The stock did the cycle that we knew would happen, and we wanted to avoid it. We did not want to chase that big run up. So again, from 275 to 1229, this is not where I want to buy. This is looking much more attractive. As I mentioned, the technicals, that 490 gap fill looked like a good area to add, which is where we added in Discord. We said 300s is possible. There was a co-presentation with Jensen Huang a month or two ago that made me really believe more in SMCI, just about what they're doing. It's a lot more than just the racks. It also includes software. And they do have a strong partnership with Nvidia, which does add to my conviction. And it does have incredibly strong momentum, really both directions, attractive balance sheet, excellent growth and profitability, although the margins have come down quite a bit. And that shrink did make sense. It wasn't a surprise. And I believe it was addressed adequately on the earnings call. Now, part of the reason the stock saw so much pressure and it fell so hard, it topped the list as most shorted large cap stocks in July. So as of July 31st, traders sold 5.41 million shares short of SMCI. That's about a 9.67% of shares shorted. So of course, it's all about supply and demand, buyers and sellers. You've got a lot of short sellers, not a lot of buyers. The stock can go a lot lower than you think it will on the downside. And of course, on the upside, well, it can do some crazy things in the upside as well, as you can see on the chart. So I like this stock under $500. That $490 gap fill area was an area to add in my opinion. And if the momentum continues, there's still quite a bit of upside here for SMCI. In fact, the R3 is at $1,080.74, almost $1,100 a share. And of course, keep in mind, there will be a stock split, a 10-for-1 stock split in October, with the stock expected to start trading on a split adjusted basis October 1st, 2024. I did a recent video on YouTube and I told you that I liked Celsius and I gave you some price targets, essentially 45, 40, and 35. This is the S3, the S2, and the S1. This stock back in March of 2023 was around $25 and it ripped in 1 year from $25 to $100. You can see this double top here, falling from about $100 a share all the way down, closed today here at $36, $39 a share. So we've been buying in Discord around this yellow circle. My most recent buy was $37.77. Looking at Seeking Alpha, the growth has slowed down. Of course, that's going to hurt any stock, especially when it carries a higher valuation. And this doesn't have a traditional PE ratio. It does have this forward gap of 38.65. So it's definitely not dirt cheap. Price to sales 6.15, and that forward price to sales under 6 at 5.88. So I do like Celsius. You can see buyers are coming in here. It certainly could always roll over and go lower. So Celsius recently had earnings on August 6th, and you can see the EPS 28 cents, beat by 5 cents. Revenue 402 million, beat by 9.26 million. So you might think by looking at the pin action on the stock that earnings were a miss, but actually a beat. The problem here is that revenue has slowed down to about 23.4% year over year. But retail sales of Celsius in the US grew by 36.5%. International increased by 30%. I like Celsius as a long-term investment holding 5 or more years, and I use DCA, dollar cost averaging. I like the stock right here, right now, dollar cost average. The next one is Paycom. I do like this stock in this price level, really 165 or less DCA as a long-term investment. You can see the 4P ratio right now is a 20.15. It does pay a dividend, so forward yield 0.96%. The growth in this is around 14, 15%, which isn't bad if you look at the valuation. Some solid metrics here in that forward PE gap. That PE ratio is 18.8. And you can see the gross profit margin TTM, 86%, which is really solid. This is going to be a SaaS company, software as a service, so recurring revenue. It's very, very rare to find a SaaS stock with recurring revenue that has a 20 PE ratio, pays you a dividend, 86% gross profit margin, also bringing in about $64,000 net income per employee TTM. So you can see it washed out around $135. It popped up here to about $178 and then did pull back. So it's a bit of a mess. It is kind of a bearish chart. It's not the most attractive chart you're going to see, but I do like the fundamentals of this company, thinking as a long-term investment, 5 or more years, especially 165 or less DCA. Okay, so next I like Airbnb. I'm staying in an Airbnb right now, and this has been an amazing trip, and I couldn't have done it without renting out this house on Airbnb. I'm able to cook my own meals, went to Costco and bought my own food. It's been a great experience, and I do think that Airbnb is going to be around for a long time. It's a free cash flow machine. You can see here earnings were recently August 6th. We did have a miss on the EPS, misses by 5 cents. Revenue $2.75 billion. Now that did beat by 10 million, but the growth is only 11%. The profitability is quite high on this, 82.59%. And if you look at the net income per employee TTM, $701,000. So this company is very healthy when you think of that cash flow, that profitability, the valuation, maybe a little bit expensive for some people based on the growth. You saw that 11% here, 15 and 13, not explosive growth, but not bad at all. Valuation wise, you've got a forward gap PE of 28. So not dirt cheap, but I do think that this this company will grow into its valuation. Price of sales is a 7. So again, not dirt cheap. I do like Airbnb as a long-term investment though. And recently, it was a couple weeks ago, I shared this on a YouTube video. Now I gave you these price targets, and because of that earnings miss, what we teach all the time, earnings are going to be most important. Earnings in macro are 99% of the puzzle. The last 1% is technicals. This S3 Fibonacci, so the lowest it showed for support was 126.19. It broke past that down to 110.40, really in no man's land here with a gap down. You can see it's below all the Fibonacci pivot points. It's below this blue trend line. It's below everything, the moving averages. So 110.40, this was a good opportunity. We were adding in Discord around these 110 to 115 levels. It's still around 116. It's probably going to take some time to shake itself out, but I do think that long term, this will be a good stock. And it was just $170 a share. It doesn't mean it's going to go back there overnight or anything, but I do think it will recover with time. I'm on vacation, but I wanted to take some time to share with you because you are important to me. And if you're new here, make sure you subscribe to the channel, click that bell for notification. If this video is helpful, make sure you drop a like and drop a comment. The last stock is Nvidia. I haven't been buying this in my main. My cost basis is $3.91, but I have been buying it for my daughter in her custodial account, her UTMA. In my most recent video on YouTube, I told you to buy Nvidia under $100, even at $100, that it was going to be a good opportunity if you missed the first run up. You can see it bottomed out about $90. It didn't quite get to this S3. This S3 is 84.96. The 200-day moving average slightly lower. You can see it broke the 100-day, back above the 100-day, and just below the 50-day moving average right now. Now this R3 is $152.18, and earnings are going to be on August 28th, so 14 days from now. If earnings are good, that upside is $152. I've told you in this channel many times, I believe Nvidia will be $150 a share or more in 2024, if not early 2025. But like I always tell you guys, earnings and fundamentals, macro, 99% of the puzzle. That last 1% is going to be technicals. The chart's not going to tell you what earnings are going to be in 2 weeks. If earnings are good, stock's going to remain bullish. Of course, if there's an earnings miss, stock could easily roll over. You could see it back, below $85 a share. I hope this video was helpful, guys. Make sure you subscribe if you're new here. Drop me a like, drop me a comment. Have a great rest of your day. Take care.